We'll see what the week ahead brings us. But we've got a CPI number on Wednesday. We've got a Fed meeting next week. There's some signs that point to this could be more of an inside week.
Okay.
Not a ton going on unless we get one of these unscheduled headlines that shake things up. But prompted me to ask the question: which forex pairs tend to move the most? And this is some analysis we've done time and time again. But taking a look at popular U.S. dollar pairs, we've got the standard deviation of daily price changes. So this will give you an idea of what a standard daily range is in pips for all of these markets across 4 different time horizons here. What stands out to you here? I'll start with, I look at the 3-month standard deviation primarily because that gives, of these data points, kind of enough data to base things off of, but also stays a little bit relevant to how things are moving across the globe right now. But this 3-month, to me, is now looking a little bit more of an outlier because it includes some of those early April shakeouts, but those are now maybe behind us.
Sure. Yeah, I definitely. First thing that you see is obviously dollar yen with the biggest pip moves out of any of these popular USD pairs, but also just the general trend. If you move from right to left in almost any of them, you're seeing a little bit of a widening out of that standard deviation. So an increase in volatility going from 6 months to 3 months. So to Glenn's point, the last few months being the most volatile period of any of the time periods that we're looking at here historically. But then the general trend from 3 months to 1 month to 1 week here is lower vol, tightening of standard deviations here. Now, I also don't think it's any coincidence that if you're looking at the last 1 month and the last 1 week, what have we not gotten as we head into an FOMC is we haven't had an FOMC in the last month.
Sure.
So there's that. But yeah, more importantly, in the last month, we've seen a little bit of diminishing volatility returns around the tariff talks that obviously hit 2 or so months in the past. So it's an interesting one here. A couple of call outs for sure. I mean, that dollar Swiss franc.
Right, yeah.
Really interesting that vol got so juiced in that they were moving. If you're looking at the 3-month correlation, I guess that the number is still relevant right now. If you're looking at the last 3 months, not correlation, standard deviation, the standard deviation would still tell you, man, this dollar Swissy is moving 70 points on a given day. Now, we haven't really seen that in the last month or so. So some interesting little tidbits. But when I look at the left part of your table here, I wouldn't necessarily take those 1 week numbers because we have been pretty low vol the last week specifically.
Right.
But I would more look at that 1 month number as being like, my porridge is too hot, my porridge is too cold. That one probably is the column that I'd be like, this seems normal because of course, yeah, like to think that we're going to get 120 points in dollar yen every day, I don't think is normal because that has just those crazy tariff moves of early April in that data set. Same with dollar Swissy, 75 points every day is a lot to ask for. But I mean, 60 points in euro dollar, reasonable, 50 in sterling, 100 in dollar yen has absolutely been reasonable. And as you go down the line there, of course, it looks like, oh man, those commodity currencies are so boring. 30 points in Aussie, 32 points in Kiwi. Those are lower notional pairs. And so on a percentage basis and a potential return and risk basis, more volatile than some of the other ones you're looking at.
Absolutely. And quickly wanted to call out some of these non-US dollar pairs, perhaps those slightly more volatile. And this one, an important call out as well. If you look, to the biggest number there, that Euro Australian dollar in the 3 month.
That's cool.
That one as well is similar to kind of the U.S. dollar, Japanese yen, where it's priced pretty rich, as opposed to for U.S. dollar, Australian dollar is the base currency.
That's very cool.
So you get some similarities there.
Euro Aussie, great. Wow, this just calls out that Euro Aussie might be a better pair for day trading, for scalping around, than that Aussie USD. Man, some interesting action. Again, that 1 week, I would kind of throw that out. It's been kind of a lame last week. But if you're looking at even that 1 month, as well as obviously the 3 month data, that's some significant price action for people looking at some day trading in non-USD pairs, that Euro Aussie. And of course, that's going to be a relatively low margin pair as well. Euro USD being 2% and Aussie USD being 3%. So that pair is probably 3%. And then that sterling yen, another interesting one. As well, because you might think like, oh man, on those weeks where US dollar is beating up on yen again, it's like, oh man, like this is probably the most extreme price action, but sterling's been beating the hell out of USD the last couple of months. And so if you're looking for some extreme price action, that sterling yen piece might be your ticket. Yeah, across the board, pretty much there, over 100 points of movement. That's this is some cool numbers.
Yeah, similar trends, but definitely some unique opportunities if you're looking to diversify past that U.S. dollar. And before we get out of here, just wanted to call out what you called out earlier, that there are, we were looking just at per pip movements. There are definitely some other variables that go into all of these calculations. And a quick example is looking at the Australian dollar versus U.S. dollar, Japanese yen. Because of the margin rates, because of where we are in terms of the exchange rate of Australian dollar, US dollar being so cheap, you can, with the same margin, you can size your trade a little bigger, get more movement per pip, and get a theoretical profit or loss based on the daily ranges a lot wider than that dollar yen, even though dollar yen has a lot higher of a daily pip range. So a lot of things to consider here when you're looking at these per pip movements, but we'll see if it ends up being more of an inside week like those 1 week standard deviations, or if we start to see some volatility come back in these major forex pairs. But that'll do it for us here today on Forex Focus. Thanks for joining us. It should be a fun week.